Hello, hello. Good morning. Welcome to another stream of ES Futures Trading. Today is Friday, October the 20th. It is 9:29 a.m. Eastern Time in the US. Okay. We had this market now. Just really quick here. We have just a couple minutes before the opening. These are look at the time frames here. We have the market finally took the 200 moving average, okay, out. We have a range on the weekly. The trend remains to the downside, and monthly, and we may have a range here, a 4-day range inside of this big one. The market might be targeting this low. Don't know. The daily shows that the ultimate destination of this trade is this low up down here. We were talking, I guess, yesterday or before yesterday about the potential of sequential trade here, where or when the trade actually, because we have non-excess high here and non-excess low here, and the trade actually is once one of these weak levels are taken, the trade is actually the opposite, right? In this case, if we have a look above and fail, the opposite. Once this happens, the opposite side of the range becomes instantly become the potential or the ultimate destination of that trade. The bond market has opened 1 hour ago. It's offering some relief. We have a lot of chop yesterday, and we're having a good rally. The fact that this market is having a rally. I hope this continues. This offers some relief to the market. It removes some pressure. It has a big low, and I don't like the fact. Oh no. Come on. Oh, come on. I thought we have an overnight low, but no, we have a low that was made yesterday in the daily, a really good one actually. We have excess down here. We have good excess. Yeah, this has really good access here. A downside trend here. The potential to having this is going to the downside, this is going to the downside. The potential that this time frame, which is the weekly, have or get in sync with these two are increasing now. If the market closes somewhere in here, as I hope it doesn't it doesn't come back inside this range. Because if that happened, if we don't have excess in the upper side, it could come back all the way up to here. I would monitor where this closes relative to the previous weekly bar today. Because this could be the potential destination trade. Notice here in this weekly time frame, I'm trying to do this fast. Okay, I can put this one here as well. Okay, if I put this here, this will be excess. This is excess in the lower side. So I will check this low. What is this low here? 42.77. 42.77. That's the low. That's the low of that range. What is 42.77? Oh my God! Right where this nuance is. That's the low of the previous 1, 2, 3 weeks ago. Okay. Let's see if the market can take this thing. Now, when I check my daily profiles, I got 1 minute here. There is absolutely nothing here that can offer support for any kind of break. Offer downside continuation here. And also, this market is coming from this. You remember yesterday we have this post. All this rally comes from the breakout of this super balanced 3-day range here. And now the market is back inside. Coming back inside this, I automatically see this thing. Yesterday I was shorting the market. I have I guess I was too early here. I was stopped out here for a loss. But later, when I see this market, this market was selling all the rallies. You know, you have value lower. The value we were doing this in real time as well. You know, there were really low odds that value and POC were going to move higher. It didn't happen. Now today we have inventory that is 100% short. Okay, 100% short inventory. The counteraction for a short inventory is a rally. Okay, that can happen. We also have a spike here from yesterday. I have marked this load, you know, which coincide. This is clearer than the previous day. You know, you have this low, these two lows are together, and I'm marking this low as the base of the spike. It can be this one as well. You can take any of those ones. The market has cleared the 200 moving average now. Market is below. Market had the potential to open with a gap. It did not. It did not. Notice how there's no excess here on the upper side. There's no taper here. What's the volume? Ah, boy, we have really good volume today. Look at this. This is cool. This can be good volume today. Notice where usually opens and where we are here now. Now, what that is that selling? Is that buying? Now we have a good amount of volume in the overnight. Here. Come on, man. This low is no good. This high has no excess, no taper. Many traders will be tempted. I mean, there's no counteraction to overnight inventory. That's one thing, for sure. Oh, no, see, we have the 4,300 here. Come on. You know, these round numbers are tempting. Traders pay a lot of attention to these numbers here. I think the most relevant thing for me is the market is back inside the 30-month range, is below the 200, the market is to the downside. You know, we have value going lower, we have a distribution here. I want to see if the market can close these distributions here. You know, and yesterday, it was clear to me that I wanted to be a seller. I wanted to be a seller yesterday. But what do you sell? Well, you sell the rallies here. You have to be able to, you know, every time the market has a rally, get ready for a sell. Now, what happened many times is traders, you know, we get too anxious, right? I did my trade kind of like a D period here, you know. C or D, expecting some once the market get back inside this range. This was my main reference here, and when the market finally, you know, takes this. For one thing, first, I guess what it did. I think the market was some. I don't know. Oh, was Jerome Powell here. There was nothing here until. Finally, the market took this monthly range again, and I went short somewhere in here. You know, the potential was this thing, but the market has to deal with the 4,300 first. You know, and there's a lot. And why these round center numbers? Because traders pay a lot of attention. There's a lot of buying that come here, And because of that, also, bigger time frame traders, when you have this kind of movement after Chairman Powell speech, um, it's not unusual the bigger traders, you know, get out here. And if the market continues, if the market have downside continuation, they can re-enter down here below this, because this is an area where problems can happen. The market is out of balance now. You have some taper here in the lower side. We don't have taper at the upper side. Some good buying here. I mean, not buying, some good. Oh, my histograms. This is an area volume that I have from yesterday. The next one is down here, and the next one, the big one, is that I think I can go ahead. I maybe put all this, the whole thing, maybe down to here. Okay, if I join, for example, let's see. Let's add a couple more days if I got anything here. What is happening here? This month? 10/17, 10/2. Why not having? Oh, why is not adding? Okay, like that. I'm going to go ahead and join these three here. Unfortunately, this also adds the overnight. Right? So this is the area. Can you see? This is the chunk of the volume. It's down here. But this is 4 days. Where are you? Where are you here? No, high volume area. Yeah, this is the high volume area here. From 84, 86. I'm going to do that thing. Okay. Notice that this area from here all the way down to here, it has some good volume there. All right. Okay. I think the market has to deal with 4,300 first. For 4,300 overnight inventory, and especially what the market. If there is downside continuation today, maybe next week, the market will keep these distributions, okay, or they spike here. If these distributions are close, the next thing to monitor is if the market comes back inside the value area from yesterday. The most important thing is that happens if there is acceptance up here, because the market can have some penetration up here and be rejected, just like it had here, for example, or this one as well. Oh, by the way, back to back, one day had the same. Okay. All right. Can you see the salience coming from 4,300? And this is the kind of problems that can happen when the market gets around this number. There's some really good rally that's going on the bond market. Okay, that's removing some of the pressure on the lower side. Today, what do we have today? Today's end of the week. Options. What else do we have today that can be of relevance? We have some Fed speakers: Loretta Master, Patrick Harker. Patrick Harker spoke at 9 a.m. Loretta Master speaks at 12:15, and nothing else. Nothing else. Okay. Now, the prominent, notice how much volume this has, 20,000 here. Okay, but that doesn't matter. What I care more the most here is the high, the low, and the very, especially a particular very prominent POC we have here. Very prominent POC is also held back, which coincides with last as well. Oh, look at that, man. Did you see that movement? There could be something here. I mean, those things, those sudden violent movements, those are big, big traders doing, trading the traders there. What do you think traders are doing here now? After the day we have yesterday, what do you think that most traders are doing? They're shorting the market, right? But at least that's what I think. Now if you have a capital, that's what's happening. So there's going to be a lot of shorts right now, a lot of shorts from the overnight as well, and the trade is just taking the stops, and that's it. If there is something there, the momentum traders can join, in this case to the upside or to the downside, whatever it is, and that can turn the tide. I am kind of like impressed. This is how you have to notice this. We have to notice this volume, especially this opening in particular, because this is unusual for this market. And now look at this. In the last 10 days, this much of volume, we don't have that. So something can happen today. All right, the 4300 is there, has been taken. Okay, the market is back inside yesterday's range. Now, I am watching this distribution. Okay? Upside continuation will take settle. This high is no good. It's just, if the market, for example, breaks from here, it will tell me who is doing the trade, right? Coming exactly from settle. There's a lot of activity going around the 4300. We have a very prominent POC, overnight POC. Prominent POCs tend to track the market. There tend to be some back and forth around these POCs. And I still didn't see anything here. Please, if you have any questions, just let me know. Or we have comments as well. Have a good volume here, just as yesterday. The opening has, remember what the opening had, really good volume as well. Value so far, I mean, it's too early in the morning to draw any conclusion from value, but to move value higher, or at least inside yesterday, this market needs a big rally here. It's a big rally. There is a supply there. Now, this is the thing the market needs to deal first. We have supply here. We have no supply here. another supply here. Right? These big ones here. Notice what the market did yesterday. It gets inside, it took this one out, get inside the big one, it didn't take it, and we have a break after that. Let's say the market can take at least this one. If it didn't get, if it doesn't, if it don't get even close, if it doesn't get even close to this, that's also some sign. These, for example, are going to go ahead and remove this thing now because it's being replaced by the new one here. We got some here. How much have we have? 11? That's not that much. I guess the big one is down here. Big is down here. And all together, maybe. All together now. Alright. All together now. Come on, man. You have to come all the way to come on. Could you at least do overnight high or maybe somewhere in here? That would be better. The key, today is Friday. Okay, today is Friday. There's a lot of options expiring, weekly options expiring today. The volume has been increasing. Let me show you. This is what I mean. Look at this. This is the volume. 2 millions, 2.6, 2.2, 1.8, 1.6, 2, 1.8, 1.4, 1.5, 1.4, 1.2. This is going high. Here. And what's happening? Right? What's happening with the market? The market is going lower, right? Market is going lower and volume is increasing. So the selling is attracting volume here. And that's what I want to see. If there's a directional move, I want to see something like that. It doesn't mean that the market is going to, keep breaking, right? So the only thing that it means is that the movement is having some support. Now the intraday trading is different. Okay, you put that thing in the background in automatic. That's one piece of information that is in there. Now, a bigger look. Look at this. Check this out. See the day. Check this out. No excess up here, no excess down here. We have little excess. This is no good. But the market can go all the way up to here, all the way to 200. Or even more, and still we will have a downside trade. Okay, and still we have, as long as the market doesn't take this high, there's still a market to the downside. The weekly is very close. By the way, okay, I say this low here is what I am watching here. This is where the nuance where the nuance is. Where this kind of like very obvious, the market never here, when in this day, it never did a retracing here. It was just crazy buying, short covering there. All this was short covering. There's nothing here. There's nothing here this day. When shorts cover, what happened is these are traders, or these are positions that are being closed. There are no new buying there. Mostly, um, um, and what you see here is this day doesn't have no volume. Let's check the 10.6. Okay, let's check again. I still have. I guess I still have 10.6. 10.6, right? Where are you? 10.6. What? Okay, I'm going to do that in just a moment. Let me free this YouTube because I have to update. 15, 18, 22. 9, 25, 10, 2, 10, 2, 10, 9, 10, 9, 10, 15. 10.16. Wait a minute, wait a minute. Wait a minute. And then the mic is back to this POC. Come on, man, don't tell me. Look at what happened here. You know? We're 5 minutes. It has a promissory open, really high volume, but it just, oh, we still have 10 more minutes. My bad. It can close maybe up here. If we still have 10 more minutes to go, it's 52, maybe 8 minutes. If this is half, maybe up here, so it should close. Okay. Now, I was telling 10.6. Let's check what 10.6 looks like. 10.6, 10.6, 10.6. Oh, okay. 2.1. 1516 19 19 2 2 and these 3 days now you have some increase, then look at this low it starts to increases up here, low this day here, you know. You wanna see volume joining, but it volume decreases here. You have low volume, right? I guess somewhere down here it start to increase. But now this market is breaking and volume, but at least yesterday we have higher volume here. For what we can see, for what we saw today, volume can be higher today as well. Market's out of balance. Market's the next level to see in this movement that market is currently having is this low here. You know, there's nothing here, but this should be the next thing to monitor for downside continuation of the movement. I don't have anything here yet. Yeah, what I am watching here is the market had a chance to open with a gap. It didn't. the market opening inside previously range. It has some penetration of the range of this distribution here. It went kind of like around half, maybe, which happens to be saddle. This high is very mechanical high here, very mechanical high. But the fact that it came back with, there's huge volume here. There's a lot of volume. I mean, not the ES, but the market. Right? Remember, the ES is an index. The market has good volume here. If this volume were, the market was going higher and volume decreases, right, that would have been another thing. That would have been a good short. But you have volume higher when the market was going higher here, which make me second guess myself here. I don't see anything here. The market can break, but well, I will lose the trade, right? That was not my trade. Combo from 480. Trading with Pat. What's up, Pat? The ES trader. Not again. That's a good nickname. All right. Any news out there? Ooh, the bond market is having quite a rally. It has took yesterday's highs out. Wow. Now, if that rally that we are having in the bond market doesn't make this market higher, that's also something, right? That would be this market being really weak, right? But there could be something out there as well. I got to be very aware if there's some significant rally in the bond market. There could be something in the ES as well. After Chairman Powell's speech, it was clear to me. It was clear that the only thing that I could do yesterday was being a seller. I want to sell the rallies. This market is having too much. It's taking too much time to take that. To take that low. Look at this. How much volume do we have now? 250, almost. Right? And what the overnight has. In one period, we have almost more than half of the overnight. In 30 minutes, we have more than, how much? Like 12 hours of trading? Like 15 hours trading, right? From 4 to 9. Yeah, like 15, something like that. Hours of trading in just one period. That's why I don't trade the overnight. The overnight doesn't repair weak references. From yesterday, we have this reference that has not been repaired. I know the more the market trade sideways here, right? It comes maybe 1, 2, 3, 4 days. The less relevant this becomes. Okay, what we are having here right now is exactly the same thing that we had here. It's very rare that the market doesn't come back and check this. You know, this is a nuance here, and that could be a good opportunity to sell when the market repairs this thing. But it just came. All right. All right. Oh, something that's going on is in the house. There's the boat, a speaker boat. That can have some impact here as well. Come on, don't get too close to last. Getting too close to last, put the market too close to POC, too close to previous day low, getting back inside this range as well. Now we have some volume, increased volume. Not as much as I thought it was going to be. How much is this? Maybe like 6%. Let's check that. Let me check Jim's website. Oh, 10% actually. That's not bad. 10% higher. That's good. Let's see if that increases. And the exact number is 926, but I'm rounding up to 10%. You know, this is mechanical selling. This is mechanical selling as well. Somebody's attempting to buy the market here. This high is weak, this low is weak. They have taper in the lower side. It's time to take some pills. Today is Friday. Alright, market has taken the overnight low. You know, when you have these nuances here, this is a good entry. You know, when the market comes back, usually the market comes back and gives you an opportunity to enter the trade here, which is what happened now, right? That one didn't happen. I remember these days I wanted to be long. I was waiting for the market to come back and check this one. It didn't. Now this could be, you know, the market can come back down here and repair this. But that risks taking this low out as well. Man, I don't like this high, brother. No, this is 4300 here. Come on, trading is not easy, man. Who said trading was easy? Now, for me, you know, the market, now this has come, the market, I mean, I don't think the market came this long just to leave this one like that. $61, $76, $61, $61, $76.50. All this area has huge volume here. And the one in particular, we have 61 to 63.50, 61 to 63.50. 63.50. From here to below this 200 down here. Now that nuance has been repaired. There could be some rally here. Now the next thing to monitor is this low here. That would put the market in very, the inventory will be very short here. This 200 here, this is the contract, the adjusted contract. This is the unadjusted. You know, most traders will see this one. Retail will see this one. Now this has been repaired. Okay, the same thing that we had here, the market repairs this, and that's your short, right? That's a potential entry. That was good here. What the heck is this? This was something to monitor the trade for continuation. This is it. It was actually, it was a good entry up here because the low at the time, the low was right here, which wasn't good. The same thing that we have here, up here, that is not good. The same we had it down here, that wasn't good. The market was, you know, sell the rally thing. Now, continuation, we see, I don't know if I should pay attention to this thing here too much attention to this thing here, but this is the ultimate destination of this trade here. Do you see like the market is struggling here? Very unconvincing. What do you think? Now, the thing is, the bond market is having a really good rally there. Yeah, that's the thing there. I'm paying attention to the bond market here because the ES was pretty much mirroring the bond market, and we were having like having a V-shaped break. No, we have a rally. I mean, have a range. This is a more typical of the market, right? You have a break, range, rally, range, break, range, rally, or break. The chunk of the volume here, remember the chunk of the volume here is 61, 63.50, 61, 63.50, right there, from this day. And the whole area is 276.50 from here. 71, 76.50, I say, right? 76, right here. So far, we have high volume up here, just on the upper side of this day. Just below the 4,300. Come on, man. The 10-year note is having an inside bar. I want to see what's the resolution. I mean, if the bar closes as an inside bar, what's the resolution of that of the next period? The trade is go with the breakup of the inside bar, preferable in the direction of the trend, which in this case is to the upside, meaning the intraday trade in this case. Got accumulation, we have some tanks here. This one, this period didn't get close even to the volume. The accumulation volume didn't even get inside. All of this high volume here belongs to this period. And now you can see these two together don't even get to 10. Now this market is super short now at this moment in time. It's very short now. It's 30 points breaking, only 2 periods. I have made a couple shorts here. I got 2 trades, but I don't like the way how this market is going, because it's having this movement. It has good volume though. Has good volume. This was a good trade here. Now continuation. I mean the next reference here is the lower range, which is the end of this trade. Okay. The market look above this range, fails, trades to the opposite side of the range, take this range out. The next thing, getting back inside this 3-day range, and the next thing, taking the low out. The market is now inside the 13-month range. The market is below the 200 moving average. And it's end of the week. Well, we have some things here now. Now we have volume. Look at where we have volume here. Up here we have things just from A, and here we have things just from B. Six more minutes. Let's see if we have a continuation here in the last, just before the next period here. I will be very careful here if the market comes back and takes this range out, because there's a lot of inventory here, a lot of short inventory now. And if this high volume is taken out and momentum joins, it can come all the way up to here. So this one, remember, this is very prominent POC as well. And what value is lower, very narrow profile. Remember, there's nothing here that can offer any kind of resistance to any break here. We said that yesterday, today as well. Man, but it doesn't have a conviction here, this freaking market. something that I was observing as well in this market. I hope you notice this too. I mean, when you have this big weak rally and very emotional day, we have one here. I mean, I have removed the other ones. This is the other one I can have, and this is kind of emotional as well. The correction doesn't happen right away. You know that sometimes traders just get too excited. Okay, this market is too high, right? It has to break, But it takes time. Sometimes between 5, 7, or 9 days for the market to correct. For this market, right? I'm talking about this specific market that we are in now, which is have noticed this particular way of trade, because markets are evolving all the time and we need to adapt. It takes usually somewhere within 7 to 9 days, on 1, 2, 3, 4, 5, 6, 7, 8. In this case, it took 8 days, to do some rebalancing on this inventory. Notice the shape that we have here, the short covering. But if you put these two together, it looks like a long liquidation. Okay, and having those kind of conflicting information, that's what we look at this, right? It's truncated in the lower side. It looks like a long liquidation here. And this is a bigger time frame, and this is, I would say, the next one. This is a shorter time frame. You have this short cover. This could be some of the shorts that we have from here. It's a rebalancing of the market. And sometimes the market needs to rally to keep this break. But I don't like how this is it. This is it, right? The fact that it doesn't have excess in the upper side is also tells me that this could be just long liquidation, but in a bigger time frame. Yeah? Bigger effect. And holding those kind of thoughts, two contradicting thoughts in your brain, that's something we need to be able to manage as well. And when we have those kind of thoughts, usually are 2 different time frames. Those are the activity of 2 different time frames, 2 different kind of participants of the market. The reason why I have this highlighted is this. I have a bunch of volume here, and if I have only this one, the bulk is here, and that's what I have. So there is supply. This has been a market or a market. Now there's some type of trader that's called supply and demand zone. Those traders have been. I think they were having a field camp with this contract. But as I say, markets are always changing. You need to be able to adapt for when the change happens. And if we don't identify the change, it's just okay. There's some push here towards this area here. Seems that we are going to have 10% again. 30 more seconds. This is very short, man. This is very short. The market is going to open here, and we are going to have 2 distributions now. We have one here. Market didn't even make an attempt to close this one. Again, we got low, weak low here, put low. The odds of downside continuation are high. It's very rare that the market leaves these lows like that. And if you have a rally here, leaving this kind of lows, that's actually an entry. All right. Allow me a second, please. Now this is kind of like emotional market now, so be careful. This was a good entry here. I don't know when the market gave us this rally, this was a good entry here. The ultimate destination is this low. Why I have this 200 here? This is the adjusted 200, which is 43.52, way up here. Right? The market has cleared that. Once it clears that, you know. And which one do I use? Yeah, you have to base. I mean, it is by observation that I decide which one to use. Because the other one, oh boy, actually, right now we have is right there. Huh. 42.65. 64. I have 64. This is 60. And this is, you know, this is the non-adjusted. It's right there as well. That could be. Let's see what happens here. Let's see if there's some buying here. The market takes it. Look at this, right? This is also, you know, but I don't know what to say about this or what to expect of this. Because I got these lows here. Weak low here, very weak low here. And this is the non-adjusted, okay? So should I expect some buying here? The first time, I guess I will need to give it a couple of days here to see. Alright. Because there was some buying coming. No, kind of far. Now it's exactly from this one. What is the low of this day? 66.25. 65. It's 100 difference. I will keep this chart on side. Oh. Look at that, man. Look at that. It is just curious how we try to find an explanation to everything. Now, this area, the big area, volume, nothing has been traded through. We just have, I will just let it go because I have this at the low. Has been fairly traded through. This, and that was this 4th day together. This one is just this day, the 6th. Nice buying there, coming from the 200. Now, how you got those 200 is in Thinkorswim. Notice in Thinkorswim. Notice these gaps, for example. There was a gap here, right? This is the non-adjusted contract. If I got futures here, adjust for contract changes, right? It's not highlighted. If I do this, notice what happened. Notice where this is, where these ones are these gaps, right? And this one in particular, 4350. Right? Notice that there is no gap here. Now this moves higher up here. Because there's a difference between contracts. The last contract, when there was a change, there was a difference of almost 50 points there. Okay. I want to see how the market reacts to those numbers. You can see that the market is paying attention to this number, right? So that 42.65. I'm going to change this. I'm going to put this 42.65 here. It doesn't make the difference, right? 1 point, it doesn't make the difference. Just let's put it here. It's just the area. So there's some mechanical buy in there. Which one matters is the question. Which one has more weight? I think the adjusted contract. Because that's the one that has more. I mean, both have participants, both have traders on it, but which one has, I know, which one may have the most, which one could be the ones that have more staying power? I believe the adjusted contract, because those ones are longer terms holders. I mean, why I would like to know where's the adjusted, for example. No? If I just trade the intraday, I don't care about that. Who would care? Who may care? That's the question, right? And always, even if I have that as if I do that assumption, I always observe, right? Because if I see the market doesn't pay attention to this, the market did pay attention to this because the market came close and there was a buy here. And I will, you know, if the market doesn't pay attention, I will just disregard that level, that reference. How much more volume? Oh boy, 6%. Volume is decreasing here. It went from 10 to 6. Volume is decreasing. Kind of like emotional day. Remember opening inside previous day range advertised chop. I mean rotation. Increase the also rotation. Directional or trending days are just a few percent. I mean, like 20% of the days are rotational or less. Most of them are rotation, are trending days. Most of them are rotational days. All right, guys. Unless there's any questions, I'm going to call it a day. I wish you a good rest of the day. Stay safe out there and have a wonderful weekend. Bye bye.